Hey everybody, Smart Silver Stacker here. I wanted to make a quick update video for you. Last night, several of the largest online bullion dealers suspended sales of physical silver and issued statements that sales would resume once overnight trading in silver began. Now that paper markets are open and overnight trading has begun, we've seen some significant movement in the spot price of silver, and I'll be covering that in more detail. Hashtag Silver Squeeze has begun trending on Twitter, and I'll tell you more about that too. And finally, the CEO of APMEX, one of the largest online bullion dealers, has issued a statement on the state of the silver market that you won't want to miss. So stick around to the end of the video and I'll read that statement to you so you can hear what he had to say. So stick around, it's going to be a great video. Let's get to it. Overnight trading of silver futures began at 6 p.m. Eastern Time Sunday night. Silver gapped up higher, almost 6%, and remains higher. I think there's a possibility that we could see a much bigger move up tomorrow when trading opens in the US. I'm not too certain of the demographic breakdown, but I'd expect that most of the Reddit investors and the Wall Street Bets crowd, they probably live in the US, so things could get even more interesting tomorrow when markets open up here. Hashtag Silver Squeeze also began trending on Twitter earlier today with at least 60,000 tweets. I recommend heading over to Twitter and checking out hashtag Silver Squeeze. You can also find me over on Twitter at StackSmarter. There's a link down in the description if you'd like to head over and give me a follow. The term Silver Squeeze was also being searched on Google and has been moving steadily higher on Google Trends. Although the online dealers have resumed sales of physical silver products, the selection is still pretty sparse. The premiums have also moved notably higher, with Silver Eagles fetching 20 to 30% over the silver spot price. Ken Lewis, the CEO of APMEX, actually addresses the issue of higher premiums in a statement that he issued this evening. I'll go ahead and read that statement now so you can see what he has to say. In the last week, we have seen a dramatic shift in silver demand from our customers. For example, the ratio of ounces sold per day was running about 2 times earlier in the week, and closer to 4 times the average demand by the end of the week. Once markets closed on Friday, we saw demand hit as much as 6 times a typical business day, and more than 12 times a normal weekend day. Combined with the extremely high demand levels, we are also seeing a surge in new customers. On Saturday alone, we added as many new customers as we usually add in a week. Any precious metal dealer will take a long position in the futures market to protect against spot price exposure when the markets open. We do this because it is our goal not to take a speculative position on metal. The weekends are unique as we are not able to real-time hedge our position. We took an aggressive position this weekend, but clearly could not have predicted the volumes that were seen. We have partnerships around the world that allowed us to cover these long positions, but only to a point. Once we exceeded our comfort levels, we had little choice but to stop the sale of silver on our website. This was a difficult decision to make and unprecedented in our history. As we evaluate the markets, it is difficult to know where silver's price and demand will go in the coming days and weeks. APMEX is highly capitalized and has more than $150 million in inventory to support demand. We have made strategic decisions to procure additional metal, locking up any metal we can find in the marketplace. We suspect premiums will rise and rise quickly, as we are seeing significant increases in our costs when we can even locate the metal. It is also highly likely that we will need an additional day or two to fill orders based on current order counts. The one guarantee we can make to our customers is that you will only be sold metal that is on site, or we have procured the metal with a firm commitment date from our partners. In markets like this, we feel this is the best approach a retailer can take, as no one can predict product availability. We want to thank our customers for their patience and understanding during these turbulent times. APMEX prides itself on best-in-class service and delivering on promises to our customers. Regards, Ken Lewis, CEO APMEX. So, lots of information there in that statement. But the piece that really stands out to me is that the CEO of one of the largest bullion dealers expects premiums to rise and rise quickly. Only time will tell, but I think Ken Lewis over at APMEX is probably onto something there. If we do see a silver squeeze in the near future, physical bullion could become the proverbial unobtainium, to borrow a phrase from Mike Maloney. If holders of futures contracts begin demanding settlement in physical metal, expect the price of physical bullion to explode higher. There may even be a total disconnect at some point between the paper price of the metal and the price of physical metal itself. I'd like to know what you think about the prospect of rising metals premiums, so let me know in the comments below. And if you liked this video and you want to learn more about the silver squeeze, then check out this video right here. Thanks for watching, everyone. I'll catch you next time. Smart Silver Stacker out.